A very good evening to all the participants for today's session hosted by IIA India and in collaboration with the Hyderabad chapter. Uh, I would first of all thank and I would rather wish everyone a happy Vijayadashami to all the participants. I am Aditya Guharoy, Joint Secretary of the Hyderabad chapter, and I will be the moderator for today's session. And before we start, I would like to introduce our speaker. He's Mr. Fayaz Sheikh, who's currently working as an audit manager in ICRISAT. His major responsibility includes delivery of global audits and conducting investigation having a financial impact. Fayaz has overall 10 years of experience working in audit-related roles. Prior to joining ICRISAT, he was working at Dr. Reddy's, Deloitte, and PKF India, where he has performed internal audits of diverse processes in various sectors and was also involved in investigations. Fayaz is a qualified chartered accountant with CIA and CFE certification. Fayaz has been actively involved in various IIA related activities and also has served as the IIA Hyderabad chapter as joint secretary. Fayaz, on behalf of all the members, I would thank you for taking out time today and discussing a very important topic, or rather I could call the pillar of any audit, which is called as the audit planning. And developing a risk-based internal audit plan is the most important aspect of any audit, I feel. So not taking much time, I would hand it over to Fayaz for the session. And one more thing, all the participants, if you have any questions, please put it up on your chat box. And after the session, we'll have a Q&A session where the questions will be taken from the chat box itself. Thank you so much and have a great learning.
Thank you, Aditya. Hello, everyone, and good evening. Welcome to another sharing session on developing a risk-based audit plan. So I will start my presentation.
Fayaz, just your voice is not clear. If you can just.
Okay. Sorry. So is it fine?
Yeah, it is fine.
Hello?
Yeah, it's fine.
I will start my presentation with the standards from IIA on audit planning requirements. So there are specifically 3 standards which specifies or makes how important the audit planning is. The first standard speaks on the chief audit executive must establish risk-based plan to determine the priorities of internal audit activity consistent with the organization goal. So you can see the 2 important aspects here, the chief audit executive and the organization, which we will see more as we go into this presentation. The second one is speaks on the internal audit activities plan of engagement must be based on documented management assessment and which is to be performed at least annually. The input of senior management and board must be considered in this process. It is very important aspect of internal audit planning. The third one
Fayaz, if I can, if I can stop you, I am getting some responses from the audience that the voice is actually not clear. I mean, it's very low.
Okay.
Yeah, if you can just adjust it, and it will be great for our speaker, for our audience. Yeah, all the participants, please give us a minute to rectify this.
Yeah, sorry about that. Hello?
Hello?
Yeah, how is it not? Sorry about that. Hello? Is the voice clear?
Yeah, it is a bit clear. Yeah, you can just speak a bit slowly as well. I mean, that's what I'm getting. Yeah, okay. We can go a bit slow, Fayaz, today because the clarity is not there much. So we can go a bit slow. That I can suggest. Okay. Yeah, thank you. We can continue.
So, sir, are you using a headphone or?
Headphone only. Earlier it was fine only. I don't know. I've changed the headphones also. Let's see how it goes. Can I? Hello?
Okay. Yeah, you can check it. Yeah, you can check through headphones, sir.
Yeah, I'm using headphones. Now it is clear, right?
Okay, sir. It's fine, sir.
Okay, sorry about that. The chief audit executive must communicate the internal audit plans and resource requirements, including significant interim changes to the senior management and the board for review and approval. The chief audit executive must also communicate the impact of resource limitations if there are any. So, as IIA specifies that CA is the responsibility, but it has to be performed together with the service manager from the team. You can see on the right side what are all the activities or steps involved in this process. So, CA and the internal auditor should work together to understand the organization, identify, assess, and prioritize risk, coordinate with other providers, and also estimate the resources, propose the plan and solicit the feedback from the management. Finalize and communicate plans, and also assess the risk continuously. Update the plan and communicate if there are any updates. So we'll move on to the next slide. Let's also go through the key definitions. The internal auditing is an independent objective assurance and consulting activity designed to add value and improve an organization's operation. It helps an organization accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. So we need to see whether we are covering all the aspects of the definition process. The risk is defined by both. I have put the definition of risk from both IIA as well as ISO. You can see the risk as per IIA is the uncertainty of an event occurring that could have an impact on achievement of objectives. ISO also defines the same, the effect of uncertainty on objectives.
Sorry, Fayaz sir. Can you use mic without headphone? I think many people have problem.
Okay. Fine. Okay. So how is it now?
Yes,
it's
sir.
much better. It's much better.
Okay. Fine. Okay. So I am not using the mic now.
Please use a mic, no?
So mic, the echo was coming, sir. I don't know. Some time back it was fine.
It's fine, sir. It's fine, sir.
Now this is fine. This is fine.
Okay. Fine. So we'll move ahead. This is an interesting slide which clearly states what should not be and should be done in internal audit planning. On your left side, you can see, I assume this is an internal audit team where they are blindly deciding on what audits to be performed, which should not be done. Actually, what should be done is the internal audit activities plan of assurance engagement must be based on documented risk assessment undertaken at least annually. The chief audit executive should consider accepting the proposed consulting engagement based on engagement's potential to improve management risk, add value, improve the organization's operations. So there are two types of assignments which we undertake: assurance and consulting. Assurance should be performed based on a risk assessment, and consulting activities should be performed on the engagement potential and the internal audit team's potential and availability of the resources. So let us also understand the risk-based internal auditing as per IIA. IIA defines risk-based internal auditing as a methodology that links internal auditing to an organization's overall risk management framework. Risk-based internal auditing allows internal audit to provide assurance to the board that the risk management processes are managing risk effectively. So as this process, we also give the assurance to the management at least annual basis that the risk management is managing the risks effectively. And it should be in relation to the risk appetite, which was fixed and approved by the board. So here clearly I brought out the difference between the traditional internal audit and risk-based internal audit. As you can see, in traditional internal audit, we give control assurance based on routine audits, which we try to do every year, similar kind of audits. But in risk-based internal audit, assurance on effectiveness of risk management is also given in addition to the control assurance. So these are all the steps, or rather a cycle in risk-based internal audit development. There are total 7 steps involved here. So we can discuss each steps in detail in coming slides. I will just brief on each steps. In understanding organization, we try to understand what is happening in the organization on an annual basis. What are the significant changes happening at a strategy level and structure level? And based on that, we try to create or revisit the audit universe, which is already there. And later we perform the risk assessment of the audit areas. Then audit planning is done, where we also see the resources and draft plan will be presented and discussed with the senior management to get their inputs on the same. Later, once it is finalized at draft level, we present it to the board audit committee, rather than seek for the board's approval through audit committee chair. Then we perform the engagement based on the plan. But the job doesn't end there. We need to also continuously assess the risks and also see whether there are significant changes happening and incorporate the risk in the audit plan when there is a requirement. And this should be updated to the board time to time basis. Here the CAE plays a significant role in this process. So the first step, let us discuss on the first steps. And the understanding of organization, following key documents which we require for these steps. For this stage is like organization chart, which we get from if there are any significant changes in the organization chart, any new roles which are significant strategic level they have come, and strategic plan which may change on an annual basis or due to some event, and minutes of meetings with the senior management or any important meetings, and previous assessment and reports from various assurance providers where the organization is subjected to audits. And detailed operational documentation like process maps, we can take it. Annual reports, any regulatory filings are also useful to understand what is happening in the organization. And important details from like disinvestments, mergers and acquisitions, where we can change, based on which we can change and update the risk audit universe. So below are the important stakeholders to whom we consult and discuss at the initial stage. We meet as an internal auditors, we meet the management, important key stakeholders, understand what is happening in the organization, what are the key areas to be looked into, meetings with the board and governance committees which are there in the organizations. So many of the audit teams, they use surveys, interviews, brainstorming, and research also. Informal communication, which is also an important aspect of this step. So we can summarize here. On the left side, you can see stakeholders who are to be considered: the board, audit committees, senior management, second line functions, who actually are in the work environment. A lot of inputs and data we can gather from these lines. Marketing people and external auditors also play an important role in before we build up the audit universe. So types of communication which generally the audit teams use is the face-to-face meeting, where phone, online, surveys, interviews, and also on informal communications. Once this is being done, the next step is revisiting or creating the audit universe. So once the strategies and objectives are identified and understood by the audit team, CAE may want to create the audit universe or revisit the audit universe within the organization. Audit universe, nothing but the inventory of potentially auditable units, which the audit team or audit departments updates on an annual basis. So you can see the audit universe can be based on topic, subject, project, department, process, and it can be varying company to company, audit team to audit team. And it has all the important areas which are having risk for audit engagement. So when we perform the updation of audit universe, following are the steps we need to do or before checking that the audit universe is complete. So following risk, organization strategy and chain of value creation, we go through all major areas, units, departments, projects, and strategies we understand at high level. Organization chart. Here we tend to discuss with all the heads of departments, legal, ERM, HR, what is happening in the organization. And third party vendor, any important vendors have been introduced in the organization, for whom a substantial outsource has been done, any processes and sub-processes of all the major functions, so that process mapping can be done. And important or major IT applications have been introduced, or information system assets, including hardware and software. Regulatory and legal compliances requirement that apply to the organization should also be understood. Non-financial performance indicator, these are all the important performance indicator of late. You can see a lot of importance has been given to the EHS audits, environmental, health, safety, and also gender and diversity and social audits. These, how the organization looks at these, should also be identified and considered before we develop the audit universe and or update the audit universe. Later you can see the appendix A, which I have given, so that we can see the how the audit universe looks like. Next step is on the risk assessment of the audit universe. So the organization-wide assessment enables the chief audit executive to focus on those risks that rate among the significant. So here the significant means not all risks we can see. So we need to prioritize the audits on the top risks and which are adding to the objectives of the organization. Organization may be having ERM team, but we can take the data from the ERM team, which prepares the risk registered with the risk universe for the organization as per the standard, and to be in alignment with the code of ethics and principle of objectivity. Chief audit executive and audit team should do their own work to validate all the key risks that have been documented and their relevance to ensure or assess that the accuracy of the order risk register. So it means that risk internal audit team should also perform their own risk assessment. Using the documents and information gathered, we assess, internal audit team assesses the organization's risk maturity. We have to be clear that each organization have their own risks and their own strategies. Should be, and there cannot be a standard checklist for assessing the risk maturity. So assessment needs to be done organization wise. So actions to be performed by the chief audit executive along with the audit team is like, wherever required, discuss the understanding of the risk maturity with the board and senior managers, obtain relevant documents which actually have the details of the objectives, risk analyze how the scoring has been done, how the impact is being assessed and likelihood has been met, and the risk appetite, how it was assigned, and whether it was approved and updated by the board, and conclude on the risk maturity. A first level or a first hand information on the risk maturity will be given to the management and the audit committee. And other than that, the various audit universe, the audit team might have covered a lot of audits. So last audit coverages, we need to see where the rating is high, medium, and also then requirement of compliance point of view. Many of the audits require compliance point of view. So these can be done on an annual basis and then decide on the audit strategy. Some of the risk categories are broadly been explained here: internal, external, and strategic risk. IT risk, which is emerging and very important aspect. Environmental, social, and governance risk. Third party risk, and important fraud risk. Other than this, many of us, we also try to refer to important documents or various articles from Big Fours, IIA, to find out the emerging risk and try to map them with the risk universe. Sorry, audit universe. As an example, I try to put this. You can see on the x-axis and y-axis, this is an inherent risk and an environmental control environment or controls. And you can see the thick line, which is the risk appetite, and whatever below the risk appetite is a fine because it is within the risk appetite of the organization. And in which beyond the risk appetite, you can see in the 2 point which are falling in below the risk appetite 1, no immediate focus is required, and where the inherent risk is at the highest and but the control is also fine. This control is also high, but the risk is high. We tend to do the audit on each year or every year. These are plotted and covered on a yearly basis. And where the risk and the controls are moderate, audit can be done on a 2-year basis. And the risk is low and risk is low and control is also low and fine, can be done at 3 years. This is the way many of the organizations also plot their audits and schedule their audits. This is one of the approaches. And the fourth and fifth step would be on the audit planning and discussions. Once we update the audit universe and perform the risk assessment against the audit universe, the next step would be on the audit planning, where we actually decide. Here also there are two standards which explain the chief audit executive must identify and consider the expectations from the senior management and the board and other stakeholders for internal audit's opinion and other conclusions. The second standard says chief audit executive should consider accepting proposed consulting engagement based on the engagement's potential to improve managements of risk, add value, and improve organization's operations. Accepted engagement must be included in the plan. So both the assurance engagement and the consulting engagement should be included in the plan once it is being discussed with the management. After all the above steps, draft plan is formulated. The draft plan then considers, once at internal audit level we prepare a draft plan, then the CAE approaches to accommodating the management request or board request if they, as per them, any significant risk they oversee or perceive. Those kind of requests and frequency of the audits, timing of the audits will be looked into, and the resource estimation will also be done at this level. Especially for the consulting, assessing the skills will be done by the CAE. And coordination, this is the important point, where coordination with the other other assurance providers and consulting services will be, so that there is no duplication, or we can also use their reports or their help in continuing or performing any audits. Wherever required, meeting needs for any additional skill will also be done. And hours for plan wise on audit plan will also be performed. Many of the organization, at the beginning of the year only they perform the hours, number of time, now what is a team requirement, they also plot their leaves, everything, and perform the audit plan. And this will be prepared on a 3-year rolling period or annual basis. Once this is performed, a draft plan will be developed, and the CAE will typically take the inputs of senior management before actually formalizing it or putting it in a presentation to the audit committee or full board for their approval. The chief audit executive and senior management reflect on the questions such as, like, when the plan is developed, they discuss on whether all the risks and auditable units have been considered exhaustively. Are there any upcoming changes that would not have considered methodically? So the senior management or chief audit executive have to meet the senior management and understand whether all have been considered. How does engagement in planning, whether the audits are actually in line with the objectives and top risk. If the audits are detached from the objectives and top risk, it will not give the assurance or will not meet the purpose of the audit. How do the engagement add value to the senior management and organization? This is also be assessed. Does coordination of assurance coverage and schedule time make sense? This will be discussed. Whether the timing of the audit will be discussed. And any request which have been submitted by the audit and senior management, have they been honored and why not? This kind of discussions will happen before the presentation is finalized and presented to the board. At this stage, the chief audit executive also discusses various things related to the budget. When communicating the internal audit plans, the resource requirements, the chief audit expresses the relationship between the risks faced by the organization and budget available to give the assurance. The chief audit executive brings the attention to the high risk areas that will not have sufficient assurance coverage and should be prepared to request additional resources. So at this stage, the chief audit executive also states the audits which are not covered, both the audits in the audit universe and which are not covered due to the budget constraints or resource constraints, also just to aware the management what kind of risk we are not leaving or not covering as part of audits. And also they assess whether there is other subsequent controls available for that. So when this discussion happens and the presentation is prepared and submitted to the audit committee for their approval. The plan, once is cleared by the management, or rather the inputs have been taken from the management, is presented to the audit committee. The audit committee, there again, they go through the plan and discuss the plan if there are any changes, or they also give suggestions. Once it is fine, the audit committee chairperson may present the information summary to the full board for their approval. And there will be a communication given to all the business units for which the audits will be covered. Once the audit plan is concluded or approved, the audits will be started, but the job is not done there, but ongoing also wherever there are any proposed changes during the audits, because it is a continuous process where the CAE and audit team also perceive various changes and what are the ongoing risks. CAE must communicate the changes to the senior management and get the approval for any change in plan also. And this plan will be again discussed and presented to the management and to the board if there are any significant changes. So few of the changes we try to summarize here, like if there is a significant acquisition or sale of business which the consulting engagement is required, where there is a board membership change or any regulations have been any from compliance point of view, if internal audit is required to look into any areas. So these kind of changes will be looked into, and this plan again gets changed with the approval of the board and the management. So we can just go through the how the audit universe looks like. You can see here the risk assessment is being done here on the scale of 10, and the audit rating will be given to the audit high, medium, or medium high. This is again all based on the workings. This can differ, the 10, 7, 9, this is some format which I have plotted here, but it can differ. And the audit name and the description of the audit, what we are covering here. And this is nothing but a risk-based audit plan. You can see here the department, the process which is getting audit, and the locations where the audit will be performed. The risk rating is done, and every year, thrice a year, and the ticks have been, it is summarized. So this is important, where what kind of documentations we need to maintain, or what kind of documentation we need to get every on an annual basis. You can go through this, where important like various charters we need to be taking, or minutes of the meetings we need to take, an organization charts, risk register should be considered. And if there are any RCMs which are prepared at second line, that can be taken, and important audit reports which have been issued by the third parties, that can be considered. So these documents can be prepared before finalizing the audit, and a risk-based audit plan will be prepared. Yes, I am open for the questions.
Industry. I have few questions here already. I mean, if anyone of the participants would like to put a question. So yeah, the first question is by Lohita. So Fayaz, what is he asking is, what is the best way to organize and audit units, whether it is function wise or process cycle wise? And the second question is, do organizations quantify their risk appetite?
Yeah, I will answer the first one first. There is no specific format. As you can see in my example also, few audit universe can be process wise, department wise, or also cycle wise also, maybe the function wise also. So there is no specific format. And the risk appetite is prepared by the risk appetite is approved at the board level. It is prepared based on the risk assessment detailed process, and it gets approved and usually performed by the ERM team. And then an internal audit, we generally assess the basis on which the risk appetite has been prepared, and all the consideration have been prepared, and it keeps on changing. What kind of annual basis also as an internal audit we need.
Yeah, Fayaz, could you please repeat the last part of your answer, please? Your voice was breaking there.
Okay, what I was saying is, as an internal auditors also, we need to perform on an annual basis a risk assessment, independent risk assessment, just to see what kind of considerations have been given for this risk appetite and has been approved by the board on timely basis. and if there are any changes which have been considered or not.
Okay, thanks. Another question is from Ms. Rita. Which regulations require a RBIA, as in risk-based internal audit? Was whether there is any regulation as per the standard or as per any IEA standards or as per any auditing standard is defined for this?
Yeah, I will just again show you. So these are the standards we follow as an internal audit. The internal auditor standards, IPPF standards. These are the standards which clearly specify or mandate the internal auditors, chief audit executive should establish a risk-based internal audit plan. And the internal audit plan should be after considering the risk assessment and the organizational in line with the organization goals.
Okay, there's one question from Ms. Fatima. Does change in market conditions such as introduction of new product result in change in audit plan?
I mean, it's again on the risk assessment only. If it is too significant and management perceives that there is a requirement of audit, then it should be considered for review. Like for example, if any product has been introduced and it has a significant discounts and the amount is significant, and management wants to see what is happening, there can be again introduced, the discussion can be made and the audit plan can be revisited. And
can
it all depends on the.
Can I supplement the answer, Fayaz?
Yes, sir.
Yeah, see, the audit plans are not cast in stone. It has to be flexible to adapt to the changing environment. The environment keeps changing. That is a precise reason why we review audit plans on a quarterly basis or a half-yearly basis, as the case may be, and change the plans, make necessary changes to adapt to the changing scenarios. Now, for example, at the beginning of this year, we never expected this kind of pandemic to set in and disrupt the organizations of the operations of any organization. So we have indeed made a lot of changes to our audit plan to adapt to the changing requirements. So as I said again, it's not cast in stone. Like for example, as you asked about introduction of a new product. If the introduction of a new product makes significant changes in the operations of the organization, changes the risk profile of the particular manufacturing activity, then yes, of course it will. So it all depends upon the risk profile of whatever changes that are happening on the horizon. Okay, thank you.
Great. Thank you, sir.
Thank you, Mr. Menon. We have a question from Hilda. I'll just take a few more. We have some time in hand, so I'll just take the questions coming up. There's a question by Mr. Kumar Deshpande saying that what are the examples required on audit scheduling based risk assessment? Yeah, I mean, that's what I think, examples required on audit scheduling. As in,
right. Again, I will go back to this slide, which also gives you the manner the scheduling. Like just now, like Menon sir mentioned, the risk profiling. If the audit area is having a significant impact on the risk profile, and there is the controls over around it are weak or the risk is too high, the audit can be scheduled on a much longer frequency or regular frequency. As you can see in the number two here, where the inherent risk is very high, even though the control is there, but any organization may plan to do it on a yearly basis. Where there is a moderate risk and moderate or control environment, there they can discuss on the 2 yearly basis. Again, this again on the risk assessment only. And it can vary from organization to organization and internal audit department to department also. But there should be a documented risk assessment and a manner in which it has been concluded and arrived.
right.
I hope I have answered.
Thank you, Faiz. Yes, I hope. Yes. Coming to the next question by Mr. Mr. Manzir. Yes. So what he's asking is, why don't we leverage data analytics at the planning, and what are the suitable analysis available? So pretty good question actually, because of so much
Yeah.
of data
Right.
mining and data analytics in the current scenario. Yeah.
So, yeah, as you said, it's a very good question. Data analytics of late, many of internal audit departments, we are adding it to it, like because of the audit universe and the frequency of the audit has also increased, because all the regular audits are which are having financial impact, like accounts receivable, accounts payable, they are shown as a yearly audits, and also dashboards have been released. So even though it is they are done as a part of continuous audit rather than assurance audit also, so they will be considered, and they significantly reduce the time of assurance audit also, because usually many people try to take leverage the data analytics in their day-to-day regular audits. Yes, it will be considered. It plays a very important role in audit planning, data analytics.
Right. Thanks. Another just last two more questions I'll take up with the paucity. So this question by Mr. Anton Renis: how do we need to consider control at this stage? If yes, how to incorporate?
Control at this age.
Yeah,
I did not understand this question. Sorry.
this stage, as in what he means to say, how much of assess, how much would you assess the control during the planning stage?
Okay. At the planning stage, like the controls can be discussed. Like one is like internal audit team by themselves, they assess and they try to get the important documents, what kind of controls the management has been introduced, or ongoing controls, and with the help of management itself, a lot of detailed discussions will be done. This is actually a very lengthy exercise which happens because it is not a job of like 2 days, 3 days, because the internal audit team, I think many of the established internal audit team, they perform a 30 days activity on around the planning also, 20 to 30 days, where they discuss on each audit area what kind of controls are there, if there are mitigating controls. Like I also mentioned in the presentation, there are few areas which the internal audit team will leave, stating that there is properly controlled, and also there is a duplicate or other function which is also auditing it, and there is another assurance team which is overlooking it. Like for example, a lot of safety audits are also performed with the safety team only. So many of the times the safety audits audit team does not do on annual basis, even though it is very critical, even though in the manufacturing team, because the safety audits, they themselves at second line, they perform it. So controls are assessed at each level with the detailed discussions, and they are also mapped against all the audits and risk assessment.
Can I supplement that, Fayaz?
Yes, sir. Yes, sir, please.
Yeah, see, controls are, assessed at two stages. One is at the initial stage of audit planning, overall annual audit planning or whatever it is. At that time, when you look at the risk profile, you look at the risk exposure and the general controls which we know are in place in a particular business unit, and then the residual risk is assessed on the basis of that. Now, what you do is that you have a more detailed assessment of the controls at the time of the engagement planning. In your preliminary survey, what you do is that when you gather information during the preliminary survey, you look at the risk, you look at the control, and you prepare a risk control matrix, isn't it? So your risk
Yes,
control matrix is your basis for your audit program. You devise your audit program on the basis of your risk control matrix, isn't it? So in the engagement planning stage, you have a more detailed look at the controls, and then you decide as to what are the areas to be tested and what is a extent to which testing is to be done. Okay, so controls are assessed at two different levels, as Fayaz mentioned.
yes, sir.
Right.
Even in this graph also, you can see that there is an inherent risk, and once the controls are assessed, there will be residual risk, which Menon sir has rightly pointed out.
Right. I
Yes,
think
sir.
I'll just take the last question for the evening. This is by Ms. Fatima. Can the CAE, as in the auditors, take comfort on the risk assessment done by the management if they find the organization to be matured enough? or is it imperative that the auditor develops their own risk assessment?
Yeah, even the standard requires internal audit team to perform their own risk assessment. And also there is another standard which clearly specifies on the code of ethics and independence and objectivity, where we have to do our own. Internal auditors should their own work and validate all the risk by themselves. Even though the ERM prepares it, the risk register needs to be independently seen and assessed. If there are any significant risk missed out, or if the risk assessment is accurate, this activity will be performed by the internal audit team on an annual basis. Yes, to answer your question, yes, internal auditors should perform, even though there is established ERM team. When the risk register is obtained for the updation of audit universe or audit planning, the independent risk assessment should be performed. Yeah, see, basing on which the risk maturity of the organization is assessed, and any update has been will be given to the management and the board, how the risk has been assessed, and we are in line with the organization's risk and in line with the organization's priorities and objectives.
Right, thanks. And I think I think I can take the liberty of squeezing a last question. That's my question basically. So Fayaz,
Okay.
how much do you think that the audit universe has changed in the present scenario due to COVID-19, and how do we plan for such changes?
Yeah, there is a significant change. I would say a lot of IT audits have come into, and a lot of audits because a lot of control what do you call leverages have been done, or relaxations people have taken, because most of the works have been shifted to work from home, and many of the controls have been changes and overlapping or have been done. Yes, for this kind of unprecedented situation, we have changed. Even in my audit also, we have changed few audits, like bringing in the important aspects of we started seeing the cash, how the cash approvals have been taken, bank approval. So these IT controls, how they were being associated. A lot of IT audits got included. Because you can see a lot of IT kind of frauds, phishing, and a lot of ransoms we have been witnessing. Yes, for this we have to be continuously assessing the risk in and around the organization, as well as whatever emerging risks which are happening, and see that how much relevant they are to our organization. It should be continuous process only.
Right. Thank you so much. I think the rest of the questions I can take it offline and probably share it with Fayaz, and Fayaz can answer those and probably share it with all the participants. At this outset, I would first of all thank Fayaz for taking out time and sharing with us. This is an amazing presentation, and I just hope that it is helpful for all of us right out here. And I would also thank all the attendees who have joined today's session it's a holiday for few of us. And thank you. I hope you had a good evening by taking these inputs from Fayaz. And also, I would also thank the IIA, the technical support team, Mr. Chandra, everybody from IIA India for the complete support given to us, and also all the BOG members of my Hyderabad chapter. Thank you very much and have a pleasant evening.